12th of June, Friday. Another strong day for markets yesterday. Markets were selling off initially when Donald Trump alluded to the fact that there is going to be further escalation. But we saw a sharp reversal after the tweets that negotiations had resumed with Iran. I think markets are getting to a point that they don't really take Donald Trump that seriously because he seems to be running his foreign policy from Twitter, from X, these days, which is very, very unusual sort of thing. So markets are already aware, even when he was threatening Iran to attack, most, in my personal view, market participants didn't take him seriously. Obviously, people don't want to, the algorithms, there are lots of algos, automatic selling these days already, in place, which do not sort of necessarily require human intelligence. So whenever they see any textualization, they pick signals from the news media. So when Trump tweets that we are going to attack Iran, the algos think that that's bad news, sell. But I think most market participants, they are coming to the realization that the tackled Trump always chickens out is very much there, in my view. The European Central Bank raised rates by 25 bips. No surprises there at all, given the inflation situation in Europe. 3.2% latest inflation print for the 12 months. Other than that, SpaceX has been making headlines. Yesterday afternoon, the company officially sort of allocated 75 billion worth of its shares with a share price of $135 a share. Lots of demand from retail investors in particular, who put in over 70 billion US dollars. Demand, that's the amount of demand. BlackRock iShares, they offered about, they put in an order for about 5 bill. Other than that, the order book was closed on Wednesday by the investment banks. So this is an oversubscribed IPO. No surprises there. Again, personally, am I bullish on it? Am I bearish on it? Not necessarily. I am sort of neutral because there are lots of ifs and buts around this stock. The major red flag, in my opinion, is the governance issue with this stock. Elon Musk has been sort of hogging pretty much everything. He's very reluctant to share power with other senior members in the board. So there is this monopolistic, hegemonic element, in my personal view, with this stock, which is part of the reason some institutional investors are nervous and skeptical around dipping into the IPO. Obviously, whether you like it or not, if you are invested in an index ETF, you will naturally be forced to buy the SpaceX shares whenever the index rebalances. So today we are expecting shares to trade in the Nasdaq index later this afternoon when the markets in the US opens. Here in the UK, we saw the GDP in April contracted by 0.3% after 0.1% after 0.3% expansion in the previous month. So personally, not too surprised either, because things are difficult. Things have been difficult in the UK. We are very much reliant for our energy needs on overseas. We used to be heavily reliant on Russia. Now we are heavily reliant on the Middle East. And with the continued disruption in the Strait of Hormuz, despite all the news and the deal is very close and all that, I think it's going to take a bit of time for everything to be sorted out, for everything to be properly dealt with. And what, in my personal view, market is not taking seriously is going to be the lagged impact of this worst disruption on record. So the oil market has never had this level of serious disruption in the history. And despite all of that, markets have been sort of shrugging it off as there are no issues. So that's a serious red flag in my view. So going forward is the Federal Reserve's future course of action, because that is the most important central bank in the world. The market seems to be increasingly concerned about a rate hike later this year off the back of very strong employment report last Friday, as we saw, and the sell-off followed, particularly for tech stocks. And again, we saw the inflation print came out at 4.2%, highest in the last 3 years. So these are genuine material concerns for central banks to get inflation under control. Part of the reason gold has been struggling, many people might be wondering what on earth is going on with gold. Is it not a safe haven asset? Should it not be hedging these risks? Why is it declining? I'm going to tell you why gold has been declining. Gold doesn't yield anything, right? It's a non-yielding asset. So when the yield net of inflation, when the real yield goes up, as it's been going up, particularly in the US, since the onset of the war, it doesn't help gold. Plus, US dollar has been strengthening, which doesn't help gold either. Plus, gold gained 64% alone in 2025. So it just needed a bit of a catalyst for a pullback. So due to this number of reasons for the way gold has been behaving, am I surprised? Probably not. Because, as I said before, gold is a non-yielding asset. When investor can get better, more attractive yield on government bonds, then they are less inclined to buy gold, if that makes sense. So why the yield has been rising on government bonds? Because their prices have been falling. Because America's debt has risen to 40 trillion US dollars. They pay more than $1 trillion in interest payments every single year, which is more than what they spent on their military. So, and if you look at the entire G7 construct, the debt level has reached about 100 trillion US dollars. So these are big numbers. So markets are starting to take these things into account, despite all this euphoria around AI and the exuberance around AI. But what has kept market going so far this year, the major element, what has kept markets going so far this year, is the earnings growth. As I always say, there is nothing better indicator of a long-term success or failure of a stock or an index other than the earnings growth. Yes, yield is taken into consideration. Yield, dividend yield or buyback yield is part of the total return. So is the price to earnings or sentiment or momentum driven, but these are short term. Over the long term, it's always earnings growth. So, and the S&P 500, the US stock market, has been delivering the goods. Q1 earnings were up 28% over Q1 2025, which is extremely healthy. And the earnings growth was seen pretty much across the board. So these are the things which have kept the markets going. But as I always say, don't get yourself overexposed to a certain sector or to a certain theme. Make sure you are sufficiently diversified. Make sure you are truly diversified. In being invested in a global ETF, in my view, doesn't give you sufficient diversification. Why? Because 70% of the global ETF is invested in the US. Within that 70%, top 10 stocks make almost 40% of the S&P 500 index. At the time of .com, they made up about 30%. The SOX index or PHLX index, which is semiconductors index, it is extremely concentrated. There are only 3 stocks in the emerging markets now which have been carrying the EM index. So we used to talk about concentration in the US market and looking outside the US. Now we have the same concentration in the emerging markets. So it's SK Hynix, TSMC and Samsung. These 3 stocks have been carrying the EM market, and they make a major chunk of the emerging markets index now. So what do investors do? That the only thing investors can do is to find genuine diversification, is to which makes their job a little bit harder because the market environment has become much more dynamic now. So you would need to spend more time analyzing those stocks, or you need to spend more time finding better positive alpha generator fund managers who can do the job for you. As I always say, stay diversified. Even within the AI construct, there are more than 10 teams along the AI supply chain. NVIDIA alone doesn't represent AI, if you see what I mean. So there are other companies within the AI construct. So as I always say, diversification is the only free lunch. Not even the free lunch, this is the only lunch these days. So I hope this is helpful. And if you have any questions, any comments, please drop them in the comments box and I'll get back to you when I can. All the best. Cheers.